Hi, everyone. Welcome to Financial Insights. I'm Linda, your accounting coach. So we are starting a series to explain what does closing the books mean in accounting. Closing the books is very important for small businesses and nonprofits. So when I worked at a corporation, we actually had a month-end checklist that told us what tasks needed to be completed for us to close out the books. And originally, that task list was created by a consulting group. And as you probably know, that didn't work out well because no one asked us what should be on that checklist. So it wasn't tailored for our specific division or specific plans or duties that we were handling. So for Insight Financial, each of our clients have a month-end checklist to close out the books. Closing out the books means you're balancing your books to the bank account, credit card, so you can have financial statements or create other financial reports. That's just in the simple terms. You're just balancing the books, ensuring whatever is in the bank is also in your accounting system, or if you're using a spreadsheet, that spreadsheet has whatever is in the banking system. And with having a checklist, it allows you not to think about, okay, what do I need to do? Did I do this or did I do that? Having a month end checklist allows you to kind of just go through quickly and say, okay, these are the things that need to be done so I can close out the books. This way, nothing gets missed. So, for each of our clients, just here's some common things that we usually have for our clients on their checklist. So, we always have creating the invoices. So, if you're using an accounting software and you're creating invoices, you need to ensure that you have all of those invoices into that system because that records revenue. So that relates to your sales, or if you're a nonprofit, that could be grants receivable. So you want to make sure that whatever revenue that should be recognized is in your system. Number two, bills. You want to make sure all of your current bills it's in your system because when you run a financial report, you want to show those expenses for that particular month. Other things that we also include, I like to check for unusual or large transactions. So before we do a bank reconciliation or credit card reconciliation, we like to just what we call skim through the P&L by month, look at also the balance sheet and see if there's anything that outstanding, any duplicates. So when we do the reconciliations, there's no issues. So going into reconciliations, that should also be on your checklist. So all the bank accounts should be reconciled. All of the credit cards should be reconciled. So a checklist is you can just have it in Excel. It should include the due date. It should include the task, of course, and also who is responsible. And then also just a short description on where to pull the information. So, for instance, if you have on there, okay, run an accounts receivable report, we actually put, okay, go to QuickBooks, go to reports, and type in accounts receivable. So, you want to make sure you're just very clear on where to pull that data. So, this is the first step in closing the books. You want to have a month end checklist. Very key. So once again, this allows you, each month what needs to be done and to in order to close those books. So next week we'll go more into detail about some of these other things that we include on our checklist. So make sure you tune in, make sure you share, like, and comment, and we'll see you next week. Bye bye.